What's up, traders? Sandro O'Connell with Pristine Capital coming at you with yet another market recap video. It is September 7th, 2021. Please go ahead, click the like button on this video, subscribe to my channel. Today we're going to talk about the price action in the headline indices. We're going to talk about the insane crypto sell-off. This thing was fast and furious very early on in the session. We'll go through that. We're going to go through exactly what I did to play that sell-off. And then we'll talk about, our sectors and style factors, usual stuff. Before we dive in, quick first disclaimer, nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. And last but certainly not least, do not YOLO your entire account into any one of my trades or anyone's trades for that matter. All right, let's dive into the video. Okay, so box scores for today. S&P 500 as measured by the SPY down 0.36%. We had our Nasdaq QQQ only positive index for the day finish up 0.14%. We had the IWM small caps finishing down 0.69%, a big loser for today. And then we had the Dow Jones, the dogs of the Dow, our biggest loser for the day, finishing down 0.76%. What was most noteworthy about today's trading session was that there were specific stocks that were up on the session. So names like Disney, which I traded, nice and positive, C Limited, very specific names. But overall, when you look at this market breadth, look how poor it is. So we have 18% breadth on the SPY. We have the Dow Jones with only 17% advancers. Best on the day was the IWM small caps with 31% advancers. And take a look at the Qs. So Nasdaq QQQ was up on the session, but with only 29% advancers. So these numbers that you're seeing in the headline indices are actually masking a lot of the weakness that was in the marketplace today. Let's take a quick look at our headline indices, just because today, so there's a lot of days where this price action is not that significant, like the past 5 or 6 where we were just consolidating. Today though, something different happened, and that something different was we actually closed decisively below this 5-day exponential moving average. Let's take a look. The past 4 or 5 days we've consolidated. Has there been some intraday volatility? Yes, but we have not broken down below any key levels, whereas today was day one of what could be a breakdown in the S&P 500. Take a look at this as well. So on our hourly chart, we're trading below this weekly value area. So what that's telling me is that the vast majority of players that transacted in the S&P 500 last week are underwater on their positions. And we all know investors behave differently and traders when they're underwater on their position versus whether they are above water. When we're above water, everyone's confident, everyone's having a great time. It's just like, it's amazing. When you're below water, that's where people make snap decisions, quick decisions, irrational decisions. So I certainly don't take this lightly here. We're below this weekly value area. We'll have to see what the river brings tomorrow and if that brings any continued weakness. Other thing that I noticed for today's session is that the VVIX is on the rise. Let's check this out. We're above this 5-day exponential moving average in the VVIX. We didn't close on the highs of the day, but pretty darn close. So is this an environment where I want to be, taking on incremental risk, looking for long setups, trying to go for the gold and buy a ton of stocks? No, definitely not. There's, part of being a trader is assessing the market conditions. And when you're a professional trader, you do have to act differently depending on those market conditions. Most traders do not do that. They follow the same playbook no matter what is happening in the market. And typically what happens is when the market's a raging bull, which it pretty much has been the past month, they'll do great because, they'll buy call options, they'll buy stocks. If they're in the right stocks, they go up. But where you really prove your worth as a trader is when the conditions start to change and you can see them changing and you have that window where you can take action to, pivot in your portfolio. Most traders will never do that. And that's why I think most traders, they're kind of mediocre. Let's see. So we have the VVIX. We already looked at the S&P 500. Let's take a quick look at the Nasdaq. Nasdaq was still strong today, finishing up 0.13%. But there's really just a few names that are driving this higher. So check this out. So we had Tesla, really strong performance, up 2.64%. We had Facebook, Apple, Amazon, Netflix, Google, all doing fantastic. But pretty much the rest of the index was under, pretty much under attack today. A lot of sellers active out there. So yeah, it definitely is possible where maybe these, 6 or 7 stocks can really drive the market higher, but it definitely becomes more and more difficult, the more extended this group of stocks gets, and the less participation there is overall in the market. So we'll scroll through some of these names real quick just to see where they are. So Apple, very extended from this 20-day simple moving average. We already hit the R1 pivot. So yeah, we could certainly just keep lifting off to the moon, but I do think it's asking a little bit much for Apple to continue to carry this market. Same thing with Netflix. So Netflix, this has been a great stock. Congrats to anyone that has been long this. This is really, an amazing run here. But once we start hitting that R1 pivot, what more can we really ask for Netflix? How much more extended can this thing really get? And then Tesla, this one hit the upper Bollinger Band today. Tesla also looking very solid. So we do have this group of stocks that is bucking the trend, and they're keeping everything else pretty buoyant. Sectors. So today we had our K-Web sector ETF showing the most momentum, up 4.04%. I am overweight Chinese equities, and I am basically short US equities against China currently. And really good. We are getting that outperformance from China, but we did have a lot of weak sectors today. So we had, we're continuing to see emerging markets very strong. And then I can see this global autos ETF was up. But other than that, I see social media was strong as well. Yeah, other than that, there's not really all that much to like here. We have these cannabis stocks continuing to get crushed. We have, what else? What else really struggled? So utilities down 1.32%. And of course, we had our blockchain names down 3.59%. Let's talk about these blockchain names. So take a look at this. So we have the blockchain ETF, and then it's linked to, a lot of like Bitcoin miners, companies within the digital asset space. Take a look at crypto team. So it's actually like kind of funny, kind of not, but El Salvador today implemented their, new currency regime where they're accepting Bitcoin as legal tender. And I think they did the thing where they're giving every El Salvadorian citizen, $30 worth of Bitcoin essentially. And this turned into a sell the news event. Very similar to the Coinbase IPO being a sell the news. This also turned out to be the same exact way. So Bitcoin, check this out. So we undercut the 50-day moving average. Coinbase, Kraken, a lot of these exchanges, they had issues, probably just because there was so much volume on the exchanges. But yeah, this was a pretty scary drop, to be honest, because look how many days of price action we just cut through. Pretty crazy stuff. We'll have to see where we close out for the night, and that's the crazy thing with Bitcoin. You really don't know. Could this, finish down 20% on the day? If it escalates, definitely. Or could we end up, some buyers come in the evening, push us up above the 20-day? That's the happy path. That's what I'm hoping for, given my positioning. So we'll have to see what happens. But yeah, huge sell-off in Bitcoin and huge sell-off in Ethereum. So with Ethereum, I've pretty much been trading it against this 20-day moving average. And, I've been accumulating an Ethereum position. It is my largest position by far. And look at this. So we got very extended. And I was saying up here, just setting expectations for myself, talking with Pristine Capital members about how, this is very extended. Every asset pulls back to the 20-day simple moving average. So yeah, I'm certainly not interested in buying up here. And the reason why, I'm not stopping out, nothing like that, is because we are respecting that 20-day moving average. And while it seems like, oh my gosh, a 12.5% correction, that's huge. That's horrible. This thing is bearish now. All it is just a routine pullback to the 20-day moving average. I also think, just for context, so this is 1, 2, 3, 4, 5, 6, about 7 days worth of price action. If I rewind the clock to 7 days ago, was I pretty darn happy with my Ethereum position? Absolutely, because I was building my Ethereum position for the most part in this sell-off down here. So if I was happy with my position, a week ago, why would I not be happy with my position today? So all we're getting a pullback to is last week's levels. So we're going to have to see what happens here. But in terms of my cryptocurrency trading, I'm actually pretty proud of my crypto trading today. So on Friday, I actually took some Coinbase puts. So check this out. So if you watched the video on Friday, basically I said like, hey, I'm just very overweight cryptocurrency. I know it doesn't go up in a straight line. So rather than just like trimming up on my position, selling things off, I was like, let me just add a short position. So I bought some put options in Coinbase, expiring on October 15th. And when the sell-off happened today, I had these put options on, which helped me out. Because basically I was like, I can monetize these put options and I can use that to buy the dip. I wasn't in a mindset of like, oh my gosh, I just bought Ethereum on Friday, like on the highs, and now I'm getting liquidated. No, so it worked out pretty well where I closed out my coin puts for a nice winner. Closed them out for $22.40. I'd paid $18.50. And then I was actually able to buy the dip in this Ethereum trust for $32.60. I actually got it, pretty close to the bottom on the day. Let's check this out. So this Ethereum trust, I was like, yeah, this thing, all it's doing is pulling back to the 20-day. Well, it seems like that's crazy. Pullbacks to the 20-day happen all the time. So yeah, I got this one for $32.60. So yeah, I got it inside of this lower wick down here. So we'll see what happens, with this Ethereum trust. But I did buy the dip. I used the proceeds from my Coinbase puts and put them to work in Ethereum. Now let's take a look here. So talked about our crypto assets. Also, one other thing that I want to mention is we are seeing some odd behavior in the US Treasury market as well. So let's pull this up. Yeah, check this out. So 10-year treasuries are trading below this monthly value area, and that means yields are heading higher. I think the glass half full version of what happened today was, hey, we didn't take out the lows from August 27th, which is a good thing if these 10-year treasury futures have bottomed. But we have no indication that that's the case. Last time the 10-year treasury made a sharp move to the downside like this, it was a really tough period for growth stocks. So as this is literally breaking down, do I want to be just like levering up in growth stocks? No, absolutely not. Because I certainly can't see the future, but I want to make sure that I'm making decisions that are in line with what the market is currently showing me. So yeah, this is another change in the market where these 10-year treasury futures are breaking down. If you go to the 30-year futures, we're seeing the same thing. These were down 0.65%, and these actually did break down below their low from August 27th. So I do see a lot of traders out there, some FinTwit, whatever, and I really can tell, there's a lot of these like one-speed traders out there, and I know exactly what that's like because that's what I used to be like, and that's what really just most traders do. They stick with the blinders on, they continue buy. They don't really pay attention to the market conditions or what's showing up under the surface. This doesn't mean that the market has to have like a big spill or anything like that. What it tells me is that these aren't my favorite conditions to be getting aggressively long, adding new swing positions, etc. So I'm just trying to approach the market with caution right now. Okay, in terms of some of my trades for today, so I already talked about, buying the dip in Ethereum. Airbnb I added early in the morning, and I actually took it off for a very tiny winner, essentially a scratch. And I just said here, want to remain disciplined. While the setup looks good, I do not want to add incremental risk here. And Airbnb ended up being, a nice, fantastic winner today. But really, just given my trading plan, it didn't make sense to, add risk. See, I took this one off, but yeah, nice to see it actually move to the upside. And that's the other thing. We did have some strength in these reopening names like Airbnb, Carnival Cruises, Expedia, Booking. So yeah, there were some pockets of strength today. Let's see. So we have those. And then what else did we do? So I did trade a lot of options. So Datadog, I had some October calls in there. I took this off at 9:31 right away when I saw the weakness in treasuries. Closed these out for $8.77. I had paid $8.85. So a nice 8-cent, very tight loser. And I love to just keep my losers very nice and tight. For this one, I had no hesitation. Hey, I'm taking this one off. I don't even think Datadog did too bad today either. Oh, actually, yeah, so I took this one off right at the open. So right up here. And yeah, this thing ended up closing red on the day. So pretty pumped that I got that off. So that's one of my favorite things. Like, the more you turn into a professional with trading, the more you get a thrill out of like for instance with Datadog, I have a certain amount of risk capital that's tied up in Datadog. And while I have that on the books, it can certainly make me money if Datadog goes my way, but it's also money that's at risk. I'm on the hook for that. So if Datadog goes down, my call options could go down from 885 to 785 to 685 to 585 all the way down to 0. So sometimes it's a pretty liberating feeling when you change your mind on something, then you just take it off, because then you're like, nice. Like now I'm in the driver's seat. I can do whatever I want. I took some Qs puts at 958 for 487. Was trying these while the Qs were red. I closed these out for 484, and I just put here we tested support, and it appears buyers are stepping in. So in this one, I took a 3-cent loss. I was able to sidestep, the advance that the Qs had. And then I did close out 20% of my SPY. I have a put spread on. Closed out for 160. I paid 143. Nice little winner. I just closed out 20% of it. I'm leaving the remainder on, just as a hedge in case the market spills a bit. Like I said earlier, closed out my coin put options for a nice winner. And then this was pretty cool. So I got long Disney for a lottery trade. So I got long the September 17th, 182.5 calls for 283. Put here, gave myself room to add. I will say I got pretty lucky with this one. So this morning, I do my homework every single morning. I look at news, I look at chart setups, I look at all these different asset markets across the world. I did see that Disney, they had a movie that did really well over the weekend. Apparently it was like the second highest grossing movie in quite some time, etc., etc. So I was like, okay, Disney looks in play. The chart setup looks great. I saw Disney showing some relative strength, so I bought those calls as a lotto. And within maybe like 30 minutes, the announcement came out that Disney was going to be raising its prices on Hulu. I think about $1 a month. So this was already a nice technical setup, and we did get some strength in Disney to the upside. So with this lotto, as soon as that news dropped out, I was like, oh my gosh, this is perfect. So I actually doubled the size of my position, and that got me to an average cost of $3.11.5. I ended up closing out 25% of my position for $3.55. So a nice winner, maybe 10 to 15% winner. The remaining 75% is still on, just in case Disney, makes a nice move, into OPEX. And then I did also, this could be a big trade team. So I added some SPY September 10th 450 puts for $1.11 as a hedge. And this is just in case things get a little crazy. A lot of times, over the past couple months, right now we're in the week before options expiration. There has been a heavy amount of volatility in the week before OPEX, the past 2 to 3 months. So for instance, I don't take this lightly that the S&P 500 closed below that 5-day EMA. So I was like, why would I not? Just take some puts as a hedge. So for instance, this was the week before OPEX right here, where we got the last volatility spike. So could it happen again where we retest the 20-day? Absolutely. It never really feels like it's going to happen once we've been on a run like this, but it's definitely possible. Yeah, so I just added those puts for $1.10 or $1.11. I was like, let's see what happens tomorrow. Maybe we get a vol spike. We'll see what happens. So yeah, threw those on. Yeah, and that's about it for my trading for today. So feel pretty comfortable with what I have on. But yeah, the market's definitely a bit more ambiguous. So now I'm definitely switching more to defense mode. Making sure I'm all right if there's a vol spike, that sort of thing. And then real quick, let's take a look at our options race for today, and then we will break. So today's combined flows. I love looking at this thing. This is brought to you by VigTech. I think the most noteworthy here, I talked about this in our afternoon webinar, this Simon Property Group. This is definitely more of like a reopening name. It's a REIT. And yeah, they have like a bunch of malls across the country. Simon Property Group. Yeah, most definitely a reopening trade. And yeah, not bad. We closed down 0.86%, but basically put in a little doji here. It's definitely one to look out for in the future. That being said, that about does it for this market recap video for September 7th. Thanks for watching the video. Once again, please like the video, subscribe to the channel, and I will see you all tomorrow.